Yeah,
Awesome.
a lot to cover today.
Yeah. On
Mhm.
Netflix, I hate the news, but it is what it is. It's
Yeah,
a
it is.
risk.
It is what it is.
It's a risk of being an investor. So sometimes
Yeah, we could talk about that.
sometimes the company you like is does stupid shit, and you just need to put up with it. It is what it is. So
Yeah, here, hold on. I'm playing around with the
and the
audio.
trading session is very slow. So yeah, that's the reason why we can film like earlier than usual. Yeah,
Sure,
the markets are like halted. So
bit of a turtle day.
it's been a very slow session, low volume,
Yeah,
another narrow ranging trading session. So
mhm.
yeah, this is favorable for the bulls, of course.
Yeah,
The markets
yeah.
go up on low volume, on lower than usual volume most of the time. So that's what it's
Well,
been.
in bull markets, sure, but we are in a bull market most of the time. So
Correct, exactly.
yeah, I
And
don't want people to forget.
whenever the markets pull back, that's based on larger volume than usual. So yeah, this is positive. This is positive for the bulls for the most part.
Oh, yeah, absolutely. This is not a bad day to be long the stock market, without a doubt.
It's a bad day to trade the stock
Yeah,
market.
no, it's not a great trader's tape.
Correct, but if you're an investor, you're okay with a day like this, of course.
Yeah,
And
it mm,
since we are filming the cold open, so you're down in Naples.
yes.
What's the weather like? 80,
Yep,
80.
70, 78, 80.
There you
Beautiful.
go. And I am here in Charlotte, and it's 36 degrees. So it's like
Yeah, dude, it's
yeah,
cold in a lot of places in the country, Dan.
there's a
It's
reason
fucking
why
cold.
I am wearing a winter cap. So it's really cold over
Yep.
here. So yeah,
I'll be
it's
joining you back up there in a week or two. I'm going back for Christmas.
oh awesome. Okay,
Yeah. No,
okay.
I mean, I listen, dude. It's cool if you get to visit it and then leave it. It's not great if you're stuck with it. I
100%.
understand how that goes.
Of course.
Yeah,
Yeah.
yeah. All right. I'd like to welcome in everybody to episode 24 of Charts and Checks. Here, we're going to talk about a handful of stocks from a technical, financial, and fundamental perspective. We are your hosts. I'm here with Alvaro of the Bilingual Stock Market channel, and I, of course, am Don Foyani, the gorilla with glasses. We have quite a lineup for you today, and I think we're going to start with the news. Netflix is acquiring Warner Brothers Discovery.
Yep.
What's your initial take, Alvaro?
I hate it.
Yeah.
100%. I hate it. I hate it.
Mhm.
I think this will hurt the company for 1 year, a year and a half. This is going to be a political drama and big time, you know, with regulations and stuff like that. So I don't see any logical reason for Netflix to get involved in this drama. And on top of that, they are acquiring a very toxic asset from a financial standpoint. This company is a disaster. So I hate this news. I hate it. I hate it, and I hate it, of course, because I have a position in Netflix. So I hate it. I simply hate it.
I'm an investor as well. And when I saw the first thing I saw this morning, got up a little bit late, turned on CNBC, and I saw Netflix wins the bidding war for Warner Brothers Discovery. I let out a healthy F bomb. And my fiance, who was just getting up as well, was like, "Is everything okay?" And I'm like, "No, everything's fine. It's just not, it's not
Yeah.
the news you want in the morning." Uh, I agree with you. I don't quite understand the deal. My first impression was Netflix made great content without them, and Warner's Brothers has done such a
Copycaters.
terrible job
This is
with
a
their
legal
IP.
monopoly. This is a legal monopoly. Netflix is a monopoly. No competitor
Sure.
whatsoever. So sorry, but go
Yeah,
ahead.
but I mean, I just want to walk people through how I viewed the news and how I'm kind of coming around to it. I don't understand it from an IP perspective because they've done such a terrible job that Netflix, I think, maybe underestimating how much work is going to need to be done to repair that goodwill that's been lost. I mean, Warner's Brother has recorded movies and then not released them because they've been reviewed so poorly in pre just to take the tax loss. I mean, the thing that bothers me the most, and you touched on it, was that this ruins a rather straightforward narrative for the company and introduces political risk with the FTC and the Trump administration that's going to further muddy these waters. If you're an investor, though, you need to take a longer term perspective. So, my second impression is that while I still don't understand it, if anyone can make it work, it's going to be Netflix. You make a great point that Warner's Brother comes with a lot of debt, but there's
So
plenty of free cash flow at Netflix to manage it. Supposedly, if you look at the pro forma, Netflix is estimating that this will actually be EPS accretive in 2 years post the completion of the merger. In my opinion, the real risk here is if you're a Netflix long, is the lack of M&A integration experience. Up to this point, Netflix has taken the build first solution when it comes to the production side. So I'm willing to hear the bear case that they're skeptical that Netflix can meet this 2-year projection as far as this deal being EPS accretive.
Yeah. So the price action is speaking loud and clear, bro. So the stock is
Mhm.
down. Netflix is acquiring a company that has more debt than cash position, so they will have to do a goodwill impairment. This will end up affecting the net income of the company. And again, Netflix is a phenomenal company. I think that you and I agree on that. Phenomenal company. I mean, this is like the perfect example of a very good American company. And I think that again, there's no need for this drama. And I don't know, maybe, later on down the road, this will end up paying off. But I don't understand this. And I think that this was absolutely unnecessary. It will hurt the company short term, maybe midterm. And I don't know. I mean, I think that Netflix is not in a position of being concerned about competitors.
Yep.
So I don't understand this. I mean, I'm very disappointed. I'm not going to try to disguise what I'm feeling as of now. So.
I agree. In the short term, it should definitely change how investors and traders approach the
Mhm.
tape. I think from a trading perspective, before you could have looked at the chart and made the claim that Netflix was bottoming after a really slow trudge sideways, like six to 9 months down 15 to 20%. I think now the shorts have a little bit more control. And if you're a long-term investor,
Take a
that's
look at
been
that chart, Dan. How do you
yeah, no, it's not
how
great.
do you approach this stock?
Say
I mean,
again?
how do you approach this stock? So how do you approach this
Yeah.
situation? So we just got bad news, at least in the short term, because you will always find a bull that is going to say, no, but it's all about the long term and stuff like that. Okay, perfect. Fair deal. How do you buy this dip? Take a look at this disaster. And now
Yeah.
the stock, the company itself, is about to enter into a battlefield, a political battlefield on top of that. So we know that the net income will be hurt.
Mhm.
Now we have more drama. So Paramount just announced that they will try to do a hostile takeover. Go figure that. And
Mhm.
on top of that, if the deal doesn't go through, and this is something that we don't know for sure yet, there's a breakup fee of $5.4 billion that Netflix would have to pay if this deal doesn't go through. So,
I
I mean,
I've read that that's not certain.
oh, okay. Okay. So it isn't confirmed either. That's what I read.
I don't have the knowledge of it yet, and in earnest, maybe more details have been clarified since I stopped paying attention. I had to run some errands in the middle of the day, but I heard that if this is blocked by the FTC, it is a much more favorable it's a more favorable breakup fee
Breakup fee.
for Netflix. I think Warner has to pay for some of it, but you're not wrong. It is important to realize that this is just a definitive agreement. The shareholders of Netflix will need to vote on it. And as one, I'll probably vote against unless my mind is
Me too. Me too.
changed.
I'm here. Correct. 100%. 100%. Done. So say that someone is not involved in Netflix as of now.
Mhm.
So what can we say here? So can Netflix go down to $94? Of course it can. Can it go down to $85? Of course it can. Can it go down to $82, which is the April low, I guess? Of course
Mhm.
it can.
Yep.
This technical short is absolutely broken.
Yep.
100%. So, and as of now, I have a small position on Netflix. If someone is interested in buying this dip, you have to wait until buyers show strength. I don't know, maybe recapturing the 5 DMA at $105. Netflix has been failing. It did it yesterday and today as well at $103 here. So it's a potential level of interest. This white line is the 5 DMA, the 5-day moving average. It's downward sloping. So unless you like Netflix a lot and you believe that this is good news, actually, you should stay away from this stock. It is what it is. This is a disaster. I'm very pissed, bro. I mean, maybe I don't know. I have a super strong bias against this. So maybe this is not the best day for me to talk about what is going on with Netflix. So I don't know.
I think what you're feeling, though, is reflective of how a number of people that have stepped in to buy Netflix feel.
Uh-huh.
They feel like the last 2 quarters have been excellent corporate execution, with the exception of some sort of Brazilian tax nonsense, and
Right.
it's just been sold. So for the company to go off script, because this is definitely an off script move. Again, they don't have a lot of experience in M&A. I understand where you as an investor feel a
But
little betrayed. I, on the other hand, listen, I don't feel betrayed. I don't feel any kind of way about it. I think this is an overreaction. I think that a year or two from, and again, this is investor talk. This is not here
Mhm.
and today talk. I think a year or two from now, if this goes through, because again, there are some steps that need to be made before this definitive agreement actually turns into a binding agreement that is closed. I think we're going to look at this as an overreaction. It's not good news. It's not bad news. It's just news because Netflix is capable of taking the debt blow and their free cash flow profile isn't going to change. And they're also not going to go down the same path that Warner's Brothers has been for the past 2 years or so. Or actually, they've done a better job managing their debt in the past 2 years, but they're not going to. They're going to. The problem, as far as the debt concern at Warner's Brothers, has been
Look,
contained in the
look at
past year,
this.
for lack of a better term.
Look at this.
But you know,
4.3 billion in cash
yeah.
versus a long-term debt of, get this done, $33.5
Listen,
billion dollars. What
here.
piece of garbage, man.
It's not a good company. It's not a good asset. I don't think anyone disagrees there. I think the discussion for someone who's long like I am, and in some positions I'm still up quite a bit, and others I'm down because I did start positions during this, 10% that became a 15%, that's now a 20 or 20+% drawdown.
Mhm.
I think the conversation needs to become, okay, when do I buy more?
Uh,
When do buyers step in? Because the market likes to look at things typically 8 to, let's say, 18 months in the future. That's what we're pricing. That's what we're trying to get. Right now, I think the market is looking, at least as far as Netflix is concerned, over just the next couple of quarters, like the next 3 or 6 months. And if we can get past that, then I think Netflix could work sooner rather than later. But I don't see a point of trying to get in front of that. I would just wait for the narrative to change because right now there's no reason to buy. There's no reason to buy Netflix right now.
There's no reason to buy now. Correct. 100%. So I think that I mean, is going to be an 80% cash deal, I think. This is a
Is it not 100?
63.9.
Look,
No. I think it's 80% cash and 20% stock. No, it is not a 100%. I mean, do not ruin my day, bro. I'm already pissed enough. Don't tell me this is a 100% cash.
I think what I'm remembering is I think Paramount offered a all cash.
Okay, so $63.9 billion in market cap, and I don't know. I mean, I think that we should change the
You're
sub.
right. You're right. I just looked it up. There's equity
This is not
involved
a
in the
good day,
Netflix
bro. I
side.
mean, maybe I cannot be forward looking as of now, bro. I'm pissed. So I have to be honest. I'm super pissed. I cannot be forward looking. We'll see what happens. I'm afraid. I'm afraid that we have a top on Netflix for quite some time. Let's just put it.
I do not disagree.
Mhm.
Sorry, I know that was a double negative. I agree with you.
Okay.
I think that there's probably a top on Netflix, and this deal has made it so that, at least in my opinion, for people that are long and are looking to DCA and build positions in this stock, they see that this will create an opportunity, but the opportunity is not in the next month or two. It's probably sometime down the line. So if I were, I guess my suggestion, or at least how I'm approaching this moving forward, is I'm not looking to add to Netflix until the narrative and the price changes. I need a little bit of both.
If today and the trading session is still running because it's 2:48 p.m.
Sure.
in the East Coast, if this thing closes the week below $100, this could be a short next week. I might think
Yeah.
about grabbing puts in order to hedge my position. We'll see.
Let's talk a little about that, or I'll give you 30 seconds on that. Then we should move on to our next name. When you have these stocks like Oracle and Netflix that go out of favor quickly, the reason they're easy short candidates is because they're so liquid. Shorts don't need to worry about getting out. There's no problems. They're not going to force the market against them by getting out or, getting in too quick. It's when you have this kind of liquidity, it actually makes you a bigger target than a smaller target. And now that you're in $100 stock, people that want to buy puts can buy them for cheaper than when it was at 1,000. So I totally agree with you. I think all of this came at the wrong time for Netflix, and this is a stock that you stay away from. In my opinion, it's in the penalty box. It's in the prove it category.
Is in the penalty box and about to enter into a political turmoil, big
Mhm.
times. Yeah,
Yep.
just well, let's move on. What else do you want to talk about? Let's talk
Well,
about
we're going
something
to move on to what the I can't pronounce. Is it Irene or Irene? What is the energy name called?
it's Irene Energy.
Irene
It's
Energy.
Irene Ltd, but I don't know. I mean, I got to tell you, full disclosure, I did trade it. I traded. No, it wasn't a day trade actually. It was a trade that I opened with the guys of
Mhm.
the Discord on
Sure.
Wednesday, and I closed it yesterday. But I don't know anything about the company. We just got an unusual collapse alert, a very bullish one, and we followed the alert and we made some good money out of it. Do you know something about the company? Please let me know.
Well, in about 2 minutes, you're going to know as much about the company as you need to.
There you go,
They are
please.
a vertically integrated data center company that supports Bitcoin mining and AI cloud services using 100% renewable energy. So they're a data center company, but two things differentiate them. First, they're vertically integrated. They own all the land, the power,
Mhm.
and the buildings. They like no, there's no leases. They own everything. That's pretty cool. The second thing is that they use all green energy and none of it is nuclear. It's wind, solar, and hydro. So those are the differentiating factors. And I actually, when I read that, got really interested in the company. And I would be interested in the company if the revenue streams were more diverse. If you look at their last quarters, 97% of the revenue is derived from their Bitcoin business, while only 3 is in the AI cloud. So this is really just a Bitcoin proxy treasury with the potential to become something more on the AI side, which in my opinion explains why it's outperforming Bitcoin to the downside on a relative basis, meaning that Bitcoin may be down 30%, but this stock is only down, 12 or 10. Those numbers are kind of made up. I'm just illustrating the point that they're both going in the same direction, but this stock is giving you a little bit of protection to the downside.
Can you see the screen that I am sharing
Yep.
right now?
Yep.
Take a look at the revenue growth. Growth,
Yeah,
unbelievable.
it's fantastic.
It's impressive, bro. Take a look at this. This is a growth machine, but is it related? So is this growth like crypto related, or
Yeah,
is
you. I think you have to make that assumption because 97% of their revenue is from Bitcoin. Only 3% of it is from the
okay?
cloud business. And I looked back on the comparable quarter, which would be 4 quarters ago.
Yeah.
It's the same spread. It's 95, 97% Bitcoin, 5 to 3% AI cloud. I would be a lot more interested if I started to see the cloud part of their business pick up a little bit because that would give me an idea that they're diversifying their revenue streams. Right now they're really just a Bitcoin miner and seller. I don't know if they hold this stuff. I didn't look into how they sell their Bitcoin.
But
So that's
how can they grow their net income only mining Bitcoin? Take a look at this. Impressive. So net income went up quarter over quarter from 95.5 million up to 384 million dollars. Impressive, man.
so Alvaro, if I had to guess how they achieve this, it's because they're vertically integrated.
Mhm.
They don't pay anybody for anything. They own everything, and all of their energy is from renewable sources that they own. They're not paying a gas company. They don't care what the price of natural gas is. As long as they can find water that's moving, sun that's shining, or wind that's blowing, they're powering their data centers. It's a really impressive business. I just wish that more that they had a better revenue stream or a more diversified revenue stream.
Well, take a look at the way that the way that they are diluting, bro. Like
Yeah.
a sheep. Take a look at this dilution. Very impressive. So, I mean, the
Wow.
company. I mean, this is impressive. Take a look at that.
I guess you got to pay your employees somehow, I suppose.
Wow. Let me see. Um, yeah. So yeah, I mean, the company looks very good from a financial standpoint. I mean, they made $7 million from interest income. So out of how much? 240 million. So we're gonna make a case that they are just buying,
Yeah,
uh,
but unfortunately, until Bitcoin stops bleeding, this isn't going to change.
yeah. Let me take a look at the cash. So they have $1 billion in cash. Yeah. Look, no short-term investments that are worth noting, and total and $964 million on long-term debt. The company looks definitely interesting, and I mean, this stock went down a lot recently.
Yep.
And let me pull up here the chart quickly. And Would you be a buyer of this dip? Of this dip?
No.
Okay, it's let me see how of the highs it is. 44% of the highs.
So
So
here's the thing. I think this is a Bitcoin proxy. If you overlay Bitcoin with this, I think you'll see
uh,
a very similar chart. And because I own Bitcoin outright and I own a little bit of Coinbase and I own Ethereum, I don't really need this because right now, even though this has the potential to become a true AI data center play, their revenue split over the past year hasn't shown any divergence from being overwhelmingly, and I mean overwhelmingly, 95, 97% Bitcoin. So this is just another way to buy into Bitcoin at this place. If that underlying dynamic changes, then I would be very interested. I think this is a very cool business. They just need to get some contracts with people in the data center world. Maybe that's what people see. Maybe people see the potential for a Nebius Microsoft kind of partnership where someone comes in and rents a bunch of their capacity. I'm sure that the people at Iron would be ecstatic to stop mining as much Bitcoin to take on some business that's a lot more, how should I say, enduring, guaranteed. I don't know. It's just right now it's a Bitcoin play.
that's I didn't know that, man. So thank you very much. I thought that this was a more of a center data center related company, but that isn't the
That's
case.
what to be fair, Alvaro, that's what they claim on their website. They say that they're a data center, they're a data center company, and they are. They run a data center, but the data center is just mining Bitcoin. They're not lying. They're just not being totally upfront.
Gotcha, gotcha. I didn't know
Yeah.
that. So it's a Bitcoin proxy. So if so we can make a case that if Bitcoin has another leg down, then this stock might follow it. Of course, it's down today a bit, 2.26%, trading at $45. As from a strict technical standpoint, we can make a case here that as long as IREN or IREN, as long as this stock can hold this 5 DMA as support, $45, we can round this up. Maybe we have a test of the 20-day moving average up to $49. But, and since you just pointed this out, this stock needs Bitcoin to go higher because it's a Bitcoin proxy. I didn't know this. So
Yeah.
it's interesting, bro. Perfect. I mean, I don't know. Maybe over time they can change their business model into like more of a
Yes.
data
If they
center.
were to do that, I would be interested. And I just want to, do you mind if I share my screen real quick?
Yeah, 100%, bro. Go ahead. Please.
I just want to share with people their most recent quarterly results, just so they understand that, like, I'm not kidding. The business is like just Bitcoin. Um, this is the revenue last 3 months, September 30th. Let's just say these are in US thousands. So this is
Okay.
230 million,
You're mining.
7 million in
You're mining
data
Bitcoin.
center,
Take a look. $232 million. The
230 million versus 7 million in cloud. And then if you look at it, the comparable quarter from 2024, it's pretty much the same spread, 49 million versus 3 million. I guess you could make the argument that the data center business has doubled, but the Bitcoin business has more than 4x. I'm just trying to show people that this isn't just my opinion or some sort of weird accounting with the numbers. You can just go and look at their financial statements, and it's pretty clear that they're just a Bitcoin proxy.
these are facts. This is a
Yes, this is
this is
not an
a
opinion.
Bitcoin mining company. So
Mhm.
still pretty far away from becoming a data center or cloud provider or whatever. So okay, good. It's good to know, man.
Yep.
I will
Let's
stop.
go ahead. We'll move on to Broadcom.
Sure.
They
We're about
report
next week.
next week.
Mhm.
Huge name. Huge name. You and I might be the only two people on the planet that know that Broadcom right now is more expensive than Nvidia,
Um, most people should
valuation
know
wise.
that,
Yeah.
right? Yeah, for valuation,
Yep.
valuation wise.
Yep.
Most people should know it, but you never know.
So I think what I'll do real quick before we go into the quarter is I'll talk a little bit about Team TPU because some people, myself included, I needed to get smart on this pretty quickly with respect to how this relationship works between Google, Broadcom, TSM, how Meta might get involved. So broadly, just 10,000 foot view. Google and Broadcom have co-produced a semiconductor optimized for AI inference. That's what a TPU is. You may have heard Jensen Huang refer to it as an ASIC, an application-specific integrated circuit. And there's three primary players in this ecosystem. Think of Google as the architect. They describe exactly what they want in a chip. Think of Broadcom as the general contractor. They create the blueprint to make it happen. And then think of TSM as the builder. They're actually fabricating these. So here's how the flow of money works. Google pays Broadcom to produce the finished product in accordance with their architecture. Then Broadcom pays TSM to actually make the product as they designed it based on the architecture. And right now, there's speculation that someone else, like Meta, might buy these TPUs. And the current consensus is that if that were to happen, the deal would be Meta buying them from Google. So the money flow would just add someone at the front end where Meta pays Google, Google pays Broadcom, Broadcom pays TSM, which is why I think Broadcom and Google are now trading at elevated valuations, because if you start getting bidders in the TPU world, the revenue growth at Google, Broadcom, and then TSM as well is going to explode again. And Nvidia might technically get left out of that virtuous circle, so to speak.
Okay, but what about what about what Jensen said? Like those TPUs are like low performance chips, and that no one can, so that those chips cannot be used in order to replace Nvidia's.
He's
Um,
correct. However, and this might have just been my understanding of his statement, I don't think he said they were low performance. He just said they were specific. The GPU is a lot more versatile. You can use a GPU for a lot of different things, a lot of different language models, and a lot of different AI applications. TPUs are optimized for inference, which is a very specific AI task. It just happens to be the one that all of these language models are using. Like when we talk about how awesome ChatGPT and Gemini are,
mhm.
people are often referring to, whether they know it or not, how well these LLMs are able to infer what we need and
Yeah,
deliver us that kind of information.
I get it, but he said something like, and I am not, don't quote me on this, but this is
We're
what
paraphrasing.
he said. Yeah, so he said that Nvidia is in a different universe. So
Yeah.
I mean, he was dismissing
So
kind
here's the thing. They,
what
they, they
was.
are. I think the technology is superior, but that doesn't change the fact that if you can use TPUs to achieve what you want as a company, you'll start buying them. And if you buy them, then you're going to see revenue growth at Google and Broadcom and probably TSM, unlike or superior to what you're going to see at AMD and NVIDIA, because a TPU is different from a GPU.
Okay, now I'm gonna ask you a question.
Yeah.
Here comes my here comes my curveball.
Curveball?
So okay, so um, if at the end of the day, Taiwan is going to be the company that will be manufacturing all of these chips, regardless of the
Bunch of them.
company, we
Yeah.
can make a case that all roads lead to Taiwan. So
Yeah.
there's a war out there. The war might intensify, and the company that will be selling the bullets is Taiwan. So can we make a case that instead of trying to buy Broadcom here or Nvidia or Google, because I don't know, because you believe that these companies will
Right.
be leading the AI race, shouldn't shouldn't it be easier to just buy Taiwan straight up?
Yeah, that's always been the case though. The downside of doing that, Alvaro, is that you're not going to get the same beta.
Oh.
If this works out and TPUs hit the scene, you're going to see a much larger price appreciation in Google and Broadcom than you're going to see Taiwan Semi. It doesn't mean you won't do well, it just means you won't do as well.
But you will still have a winner. So you don't need to pick.
100%. And also, Alvaro, if you can, pull up a chart of TSM. It's about to break out. It looks
Okay.
fantastic.
Yeah, let me pull it up quickly. In the case of Broadcom, by the way, I just wanted to let the guys know about the expected move.
Yep.
So let me see quickly here. I can pull it up here quickly on Thinkorswim. So they report on Thursday. I just looked at that. So the expected move is $31. This is going to be a roller coaster ride, more likely than not. The chart looks fantastic. I'm talking about Broadcom, of course.
Yep.
Can we see all-time highs into the print, into the report?
It's
Yes.
possible.
Yeah, it's possible. So we have a previous level of resistance at $391. Say that Broadcom consolidates above $391. I mean, I wouldn't be surprised if we see all-time highs before the report comes out. Now, If we take a look at Taiwan, which I haven't taken a look at this technical chart
It's a
in,
great looking chart. I'm going to add more.
take a look at this, man. This is the winner, then. I mean, I don't know. So
I think it is.
this debate about who is going to be about what chip manufacturer will be winning the AI race, since this debate is getting like hotter. I mean, if you tell me right now, then like, hey, I'm tired of this drama between Google and Nvidia and Broadcom and whatever it is, and AMD now, because also AMD will be supposedly a legit competitor to Nvidia at some point in time. I mean, if you tell me that you just will buy TSM and that's it, that you're thinking about owning TSM and that's it, I would agree with that approach, bro. To be honest with you, this is a very good looking
Right.
chart above all the moving averages. We have a rising 5 DMA. Taiwan is above the 20, the 100, the 200. So say that Taiwan consolidates above 295, we could be seeing all-time highs sooner rather than later. All-time highs for Taiwan is 312 bucks. So yeah, it's possible.
I like Taiwan Semiconductor right now. For those people considering getting in on that, you always have to remember that there's always the risk of some sort of
Geopolitical.
intensification
Correct.
between China and Taiwan. But the stock market knows that all the time. It's just how much pressure is that putting on the valuation. And right now, you could make the argument that it's not adding any pressure at this point in time because it's not on people's minds. That's just the only thing I would add.
All right. So
However,
I can take a look quickly at some multiples of Taiwan.
yeah,
I haven't taken a look at this in quite some time, so let me pull it up here quickly. If you don't mind, let me share my screen. Let's go see what is going on here. Oh, by the way, this is a tough one because this information is reflected, the financials of Taiwan are being reflected in Taiwanese dollars. So we cannot really,
yeah, it's hard to like put it into dollars terms. It's better to look at the margins because the
yeah,
percentages don't change.
correct. But or let me take a look at the ratios. So we have a forward
Oh, that works.
PE and the margins and the revenue growth. So that doesn't change because that is expressed percentage wise. So the price of sales is a 10. I mean, it,
That's pretty
it,
high.
it's pretty high relative to the most recent history of Taiwan, but
I mean, you got 10 years there.
yeah,
That's
down to
not recent. That's a lot of time.
correct. But so the point that I want to get across here is like Taiwan wasn't the same company back in 2015 than now,
Right.
right? So,
Right.
so
Right.
back in 2015, no one was talking about AI,
That's
and
fair.
now this is the main manufacturer of AI chips. So, of course, you will be paying this company a premium because the situation, the story behind Taiwan changed. We have a P, let me see, 29. I mean, yeah, it's high relative to its most recent or relative to the most recent 10 years,
Hmm.
and let me see the price to free cash flow. 42.
That's
I,
that's
I
a weird chart. That's a chunky chart.
yeah, I don't see any excessive multiple here. Take a look at this, bro. The year-over-year revenue growth is 30%.
Is that year over year or quarter over quarter? Oh, it's year over year. Yeah, yeah,
Year-over-year.
yeah.
Yes.
Never mind, never mind, yeah, yeah.
Take a look at the way that revenue is growing. I mean, and again, these are like Taiwanese dollars, so just disregard the numbers.
The
But just
trend matters, but yeah, yeah.
yeah, that's correct. Let me see, 39% on net income growth on a year-over-year basis. What's not to like here, man? I mean,
Not much, but I will say this because I think it is. I recently wrote a piece on the blog talking about how trying to pick winners in the Mag 7 actually probably cost you money. And it
I
may have
read it.
just been
I read it. Very
already,
good.
yeah.
No, you
And,
posted it
and,
yesterday. Yeah.
yeah, and it may have just been better to own all of them. That's still up on the blog. You give that a look. If you look at the SMH, which is the VanEck Semiconductor ETF, which contains all of these names and the semiconductor equipment manufacturers, that chart looks better than any of the ones we just looked at. It's about to make a fresh all-time high. It's really well diversified, has all of the players. I think if you don't know what to choose or you're spending too much time with this battle in your head, this is the easiest way to get exposure to the entire theme. And when we talk about ASML, which is one of those semiconductor equipment manufacturers that's in the CTF, I still think we're really early to this theme, and that means you can buy the basket and it can work out. Like, you're not at the stage where you're at with cybersecurity, where we have some clear winners and there's concentration. We're at the stage of the semiconductor game that everyone is going to participate still, unless you're just like specifically doing chips that have nothing to do with anything important. I think the SMH makes sense.
Yeah, I suppose that the three heaviest holdings inside SMH, and I don't have this information handy. I mean, we're talking about Nvidia, Broadcom, and TSM. So Nvidia is pretty much, going sideways as of now, but Broadcom and TSM are going up. So they are making up for the technical situation of Nvidia. So who knows? Yeah, well, maybe we can see all-time highs here for SMH, and without the direct participation of Nvidia. So all-time highs for SMH is $372. So it's possible. Sure.
Yep.
Yeah.
And for those curious, the SMH, sorry, I keep moving out of frame because I got the sun coming in and I can't block that. There's no window.
No, of course.
17% NVIDIA, 9% Taiwan Semiconductor, 8% Broadcom, 6% Applied Materials, 6% Micron, and I'll give you the sixth name, or the seventh name, because it's where we're going, ASML at 5.8%.
And now we move on to ASML.
And now we'll move on.
By the way,
Yep.
I got the three heaviest holdings right. I was right.
You did. Yeah, you nailed it. Yeah, it's a good guess. And I guess it must be cap weighted in some way because it's 17% NVIDIA.
Correct. Exactly. What is ASML about, bro? That's a Dutch company, if I remember correctly, right? What is ASML? It's a Dutch company, I think, right?
Yes, this is a Dutch semiconductor equipment maker. There are a handful of great players in this space. I prefer Lam Research or Applied Materials. Lam Research is LRXC, Applied Materials is AMAT. These companies sell the machines to fabricators or fabs like TSM and Intel used to make semiconductors. If you're not familiar, these machines are incredibly specialized and massive. Some of them are like the size of those yellow school buses you'll see, taking kids to school in the US. These companies benefit primarily from the notion of nearshoring and semiconductor manufacturing because it implies that you're going to make more semiconductor fabs. The two that are most notable, Intel in Columbus, they need these machines. AMAT, I think, is their biggest partner. And then TSM in Arizona. You're also going to need these machines. But I'm not sure who TSM is working with.
There you go. This stock was trading at all-time highs this week. This is a very good-looking chart. I mean, the 5 DMA was broken today to the downside, $1,110. Say that this stock recaptures $1,110, and we have a potential new test of all-time highs, $1,145. More profit taken, I will be looking at $1,100, previous level of resistance, as potential support. Say that it keeps going down. We have the 20 DMA, the 20-day moving average, pretty much coinciding with a rising 50 DMA. So this could be a potential support zone between $1,040 and $1,026. This is a very good-looking chart. Maybe the profit taken recently.
Yeah.
So yeah, we shouldn't rule out ASML maybe paying a visit down to $1,086, the previous level of resistance that I just pointed out. But other than that, this is just another semiconductor company that is doing pretty good as of now, right?
Well, they don't sell semiconductors; they sell the machines that.
Correct.
Yeah.
Yeah, but they trade inside the SMH, I guess, right?
As well. Yeah.
Yeah, correct. So it's a semiconductor stock for the most part.
Well, the difference is this. They don't care what happens with TPU, GPUs, or even the amount of chips being made. They benefit the most when we're making new semiconductor factories, which we are right now. The point I'm trying, if you look at and you don't need to pull these up, anyone can pull these up. They're all going to look pretty much the same. If you look at Lam Research, if you look at AMAT, if you look at, Applied or ASML, like we did just now, they're all breaking out and making new all-time highs. And I think the reason that's notable is because I think there was a lot of skepticism earlier in the year and even last year about the idea that we were actually going to see an increase in the amount of semiconductor factories being made in the world. Like, we kind of thought people were just posturing, it was just political. The fact that the stocks are now moving, in my opinion, is an implicit endorsement from the market that it's actually happening. And if that's the case, then no bear can come and make the argument that we're early to the GPU story. We wouldn't be making semiconductor factories to build more GPUs and specialized chips if we still weren't early in the story of moving off of CPUs to GPUs and potentially TPUs.
TPUs, correct. Correct.
That's
Exactly.
why I think this is important. It's not just stocks doing well. This is a signal that there are believers that we're going to basically move Earth and build massive factories for the sake of meeting demand because we just can't do it right now. And these projects take 2, 5, maybe 10 years. If you think you're still going to need the factory in that time, you have to be very, very confident that the demand picture is robust and we're still early.
Awesome. Awesome. I didn't know much about this company. I have traded it in and out here and there, but I didn't know much
All right,
about
just going to go with it.
ASML. So yeah, thanks, man. Awesome. That was a very good explanation. So what's coming up next?
We have
What's
one last topic here. Some of the members of the Patreon, or not the Patreon, the Discord rather, in English wanted to hear a little bit about Novo Nordisk and Eli Lilly. So I think by now everyone knows the story between the two. They basically both make a very similar GLP-1 medication, but I don't know when the divergence happened. I think it was 1 or 2 years ago. Lilly kind of kept going up, and Novo just started going down, and it looks like it looks terrible. So I did a little bit of research into the topic, and I don't really hate Novo per se, but I've come to the conclusion that this could be like an Uber Lyft situation where Novo really only gets to go into the markets that Eli Lilly can't supply. Because Novo
I have
Nordisk,
sorry, bro. I have to
yeah,
interrupt you. So I have a fun fact for you. Do you know? Maybe you know it, but do you know that Nova is the largest company in Europe?
Novo Nordisk,
Yeah, it is.
that's sad.
It's the largest company in Europe, bro. Unbelievable. So we are seeing today a bit of profit taking in the healthcare sector. Take a look. This is a technical chart of Lilly. So we're seeing some technical damage there. But please keep going. What you were saying?
Hold on.
Yeah,
Sorry.
sure. No, it's good.
You're good. All right. Sorry. What were you saying? You said yes, seeing some profit taking in healthcare.
Yeah, take a look, Lilly going
Yeah.
down.
No. No. Totally agree.
It's
Yeah.
open 5 DMA. So I wouldn't touch Lilly from a trading standpoint until the convergence of the 20 DMA and the 5 DMA is recaptured by buyers $1,033. We're a bit of profit taking, but take a look at the way that this stock has been going up, bro. It's been a monster. So since its last earnings report, Lilly went up 37%. So a bit of profit taking, nothing
Yeah.
crazy so far. So you were talking about the differences between Novo and Lilly, right?
Yes. So while they make the same drug, I found, or a similar drug, I should say, I found that Eli Lilly, or rather, I found that Novo Nordisk was inferior on 3 really important fronts. The first is product. Their drug is just not as effective as Eli Lilly's. It doesn't put as much weight off as Eli Lilly's drug does. The
That's
second is sales. Now, because of that, it's not getting recommended as much by doctors, so it they're not getting sold off. It's just not getting sold. It's not the first choice, so the sales are lacking significantly. And the third, which is I think maybe the most important issue, is they don't have the manufacturing capability. Everyone remembers that for a couple of months, both of these all the GLP-1 drugs were considered in short supply, and that created a certain set of FDA rules surrounding how they were made, distributed, and priced. You don't want your drug to be in short supply. It's not good if you're the drug manufacturer.
Mhm.
Eli Lilly poured their resources into making factories and increasing their manufacturing capabilities, and they were able to get their GLP-1s off of that list quicker, and they're able to scale faster. Novo Nordisk just doesn't have that capability. So even if Novo Nordisk were to find a way to improve their products or make it more, narrow the I don't know what the right word is. I guess effectiveness. It's weird to say it in terms of weight loss, but the effectiveness of their drug, they wouldn't have the capabilities to produce more of it. So as a result, if you look at the expected growth of these companies from a sales perspective, I think Eli Lilly might be double double digits with a 2 or 3 handle,
I can
whereas Novo
pull it up.
Nordisk is like not I don't even think it's a 10% revenue growth expectation. It's and that's why Novo Nordisk is getting its butt kicked. It's because it just isn't as good of a company.
So this is Lilly's expected growth on revenue from a year-over-year
Okay,
standpoint.
not 20, my bad. High teens.
No, but yeah, high teens. But I mean, for a pharmaceutical company, this is a lot.
Oh,
Dan, what is that?
EPS though for the next 3 years. Pretty good.
Correct. But take a look at the revenue.
Yeah,
This
it's
is no
important.
joke. We're talking about a pharmaceutical company.
That's
This type
crazy
of
numbers.
yeah, this is crazy, bro. This is the type of growth that you see on a very good tech company, right? So
Mhm.
19% 2026, 16% 2027, 10% 2028. So yeah, the growth slows down from next year and on, but until 2027, you have an expected growth on revenue from a year-over-year basis of 16%. This is a lot. This is
Yep.
a lot.
Mhm.
Needless to say, 2025, 42%. In the case of Novo Nordisk, let me pull it up because you were talking about this is a good point to go over. And yeah, take a look. This is a whole
It's
different story.
pitiful.
Look, exactly what you just talked about. 1% 2026, 7% 2027, 9% 2028, 8% 2029. So yeah, so Lilly is
When you look
expected to grow way more relative to NBO, at least during the next 24 months.
when you look at these numbers, Alvaro, you wouldn't suspect that Eli Lilly and Novo Nordisk are in the same business.
100%.
Yeah,
Yeah.
it's kind of sad. So I actually once heard someone try to make the case for Novo Nordisk, and they made this point that stuck with me. And they kind of made the point that if this GLP-1 drug thing is really as big as people say, then Novo Nordisk will eventually figure it out. But after I look at these numbers and look at the capabilities, I no longer really agree with that statement. Novo Nordisk is going to need to do a lot more to catch up in any meaningful fashion.
Mhm.
And it's not like Eli Lilly just woke up and did it overnight. It took them years. There was a massive consolidation period in that stock.
Yeah,
So
let's
I don't know. I'd stay away from Novo Nordisk.
let's take a look at the multiple. So in the case of Novo Nordisk, these stock trades
13
13 times forward earnings, and in the case of Lilly, I guess that the markets are paying Lilly a way higher multiple.
has to be like 50.
Let me
Oh, no,
see,
30. 32.
32. Yeah, but it's
Okay.
a fair multiple. So um, the markets are paying Lilly a higher multiple relative to NBO for a good reason because
Yeah.
they are expecting um more growth
hmm
than in the case of NBO. It is what it is. Yeah. It's all
If
about
you,
what the markets are expecting that might likely occur in the future. It is what it is.
I think the specific question in the Discord was where you might consider trading Novo Nordisk, by the way.
Oh, let me pull out the technical chart. I think I have it here. It's in a major downtrend. You know that I don't like I don't like trading downtrends.
Mhm.
This is a major downtrend. I mean, we can make a case here that the stock is kind of consolidating above $46. So
Sure.
buyers have been trying to consolidate above the 5 and the 20-day moving average, $48. So I don't know if you like the company a lot, or I don't know if you believe so. This stock is half of the highs. Let me see. So this thing is 41% of the high. So if you believe that maybe there's a turnaround story, potential turnaround story here, be my guest. I wish you good luck. I'm not. I am not touching this stock until buyers show more strength, way more strength. Let's just put it that way. I don't know.
Mhm.
Maybe they can recapture this downward slope in 100 DMA. But go figure down how many back holders do we have all the way up.
Dude.
So can you figure, say that, I don't know, for any reason, NBO starts to go up in a noticeable way, let's just put it that way. So how many people do we have trapped at $57? The 200-day moving average, $62, $72. So I think that there are better studies out there than NBO. I am not a buyer of this stock with this so ugly looking shirt right now. Thanks, but
This
no,
is one of those names that's been so bad for so long. Every time it tests a longer term moving average, I would short it
because sellers show up.
because they'll you it's almost guaranteed they'll show up.
Correct.
There's so many people in the name that are trying to get out. To your point, if we were to get a turnaround, the upside would be massive, but for there to be a turnaround, you're going to need a change in leadership. So wait for that to happen because I imagine when they announced they fired the CEO, or they're investigating a way to change management, you're going to get a pop, assuming that the person that's coming in is from an outside source. Because I don't think the company is, or sorry, the company, I don't think the market and the shareholders are going to be happy with. Okay, we're removing the CEO and we're promoting the CFO, or promoting, the president of GLP-1s or what, blah 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 blah.
Yeah.
You for this to be a turnaround, you need a full sweep of some of the major actors in the C-suite. And until you see that, I just don't know if they can get it right.
Yeah, just for illustration purposes. So
Whoa.
this
Dude,
is
that is one of the ugliest is this the VWAP thing?
yeah, the Anchor VWAP, correct.
This is one of the ugliest ones I've ever seen you show us. This is
Agree,
brutal.
agree. So the average market participant that started a position on Lilly when this stock went up to $148, this was back in late June of 2024, has an average price of $70. What do you think? The vast majority of these market participants that have losing positions as of now on NBO, sitting at $70, will do once NBO, if that ever happens, goes up to $70. They will
Well,
take the money
then
and run, of course.
they'll sell it and then they'll buy Lilly.
Probably, yeah,
Yeah,
yeah. That is the more likely outcome. Let's just put it that way. Yeah, the most
sure,
likely outcome. Yeah,
sure.
sure. Hey, 50 minutes in. So this was
50 minutes in, and I think we can wrap it here.
yeah, so this was a special edition on a Friday. And thank
Sure
you very
was.
much for your patience, bro. I was very busy yesterday.
Not your
And
fault, man. Yeah,
please
no, we were.
tell the guys about your YouTube videos, about the stuff that you're doing, and about the links that we have in the description
Oh
box.
yeah, sure, sure, sure. If you want to find, well, if you found Alvaro already, you're here. Great job, congratulations. You're smarter than most people give you credit. If you want to find me, you'll find a link to my blog and my YouTube channel. Typically, I record on Fridays, but because we're doing this today, that's not going to happen. That's okay. Maybe I'll do something over the weekend, but I also just last couple of weeks moved most of my stuff up to Florida. I'll be here for the winter, getting a new setup set up, and we run into issues like the sun coming in when we didn't know, and I can't actually change that. It's a very tall window.
I wish I had the sun around here because
Yeah,
it's
yeah,
super hot.
yeah. At least we have the sun. It's good to have it. I'm not going to be too upset about it. But yes, you can find my link to my blog below, my YouTube videos below. Thank you all so much for showing up. You'll hear from us next week. Right on?
100%,
Yeah. Yeah.
100%, yeah.
Thank you, Alvaro.
Have
Appreciate
a
the
great
time today,
weekend,
man.
bro.
Take care.
And you guys have also a very nice weekend. Take care.
Yes. Bye bye.